Everyone, we're also continuing to watch shares of CMG, Chipotle Mexican Grill. Chipotle could get a whole lot cheaper. The board of the fast casual restaurant chain approving a 50-for-1 stock split in order to make shares more accessible to staff and investors. And we're seeing the stock top $3,000 a share in reaction to this news. If you split the stock at current levels, it would trade at around $60 a share. So here with more, we've got Nick Setyan, who is the Wedbush Securities Managing Director. Nick, great to see you as always. I want to get your perspective here. And we know that there are a ranging amount of reasons perhaps for this decision and the board moving forward with this. And then it's going to come to shareholders voting to approve. But what does this do for the average investor, the retail investor out there? Does it change the propensity to buy into Chipotle?
And when we've seen this with other splits, it definitely does. Excuse me. So the demand for Chipotle shares is definitely going to go up later this year post this split, and mainly driven by retail investors. They tend to view lower price stocks as more attractive, and a lot of times it actually meets their threshold. So if someone's buying, let's say, $500 a month. Or $1,000 a month, well, you can't buy a Chipotle if you can't get fractional shares. So it just makes it more available and the demand goes up.
Yeah, Nick, there's absolutely no change here just in terms of the fundamentals of the business. But just a question for you, just in terms of that interest there going off of that, obviously making it more affordable, but the inclusion here in indexes, potentially the broader exposure. How do you view that as an analyst in terms of what it could potentially boost, how big of a boost it could be for the stock in the longer term?
I don't know if it's going to change the inclusion in indexes. I know that a lot of algorithms, et cetera, they get annoyed when this happens just because there's a little bit more volatility that they have to put into their models. If you're trying to arbitrage the stocks versus the indexes, et cetera. But essentially, at the end of the day, it's not going to impact inclusion in indexes, et cetera. So really, net, it just overall increases demand and trading in the stock.
And so, Nick, as you continue to think about what Chipotle can do to, aside from the stock price and what we're going to see that eventually move towards, what they can do to continue to just keep part of this consumer wallet right now, where consumers are trying to figure out, okay, do I spend a little bit more into that guac in that Chipotle experience, or do I say, you know what, just hold the chips, I'll see you next week, and perhaps pick up a burrito or a bowl or something like that? What are the real mechanisms, the levers that Chipotle can pull right now?
It's been very surprising in terms of how well Chipotle has done when some others have seen a slowdown. In terms of just that, in terms of attach rates, to overall spend, the lower income customer slowing down a bit. Well, last quarter they said we saw growth across all income, segments, and we really haven't seen a slowdown at Chipotle. They've been very, very successful in terms of their menu innovation. The carne asada, which ended earlier this month, was very, very successful. So that drove a lot of the same-store sales growth. The Al Pastor, came out March 12th. That has actually continued to drive some momentum. Now the tougher compares get in the way in the second half. So really, Q3, Q4 is I think when Chipotle gets really judged in terms of their ability to anniversary some of these tougher comps, especially with that much pricing in the system. And then the other part of this conversation is California. They have about 15% of their stores in California. The wage rates there are going up to $20 an hour from, right around $16.50. That's a big, inflationary headwind. And they're having to take high single-digit pricing in California to offset it. So it'll be interesting to see how consumers react in California to some of these changes, which, obviously the timing coincides with the end of carne asada and the launch of Al Pastor. So there's a couple of things we're watching there.
Nick, what's your estimate on that, just in terms of the impact that could potentially have to Chipotle's bottom line?
In terms of the California wage increases? As of right now, we don't think it's going to have much of an impact because they're going to actually be able to offset all of it with the high single-digit price increase. Now, they're in a kind of unique position in that they have enough demand to be able to take that kind of pricing. And even if you see some of the transactions transactions shift, the price increases is obviously going to boost the comp, and that should flow through to the bottom line. So as of right now, we're under the assumption that they're going to be able to offset a lot of that hit. Others aren't so lucky in terms of the peer set.
Even post 50-1 split, does Chipotle still look more attractive than a McDonald's out there? We know that you were bullish on that name to start off the year.
Yeah, I still like McDonald's. I mean, in an environment where the consumer is hyper focused on check management, I think McDonald's is gonna win. I've been surprised, at the continued momentum at Chipotle, given the average check and the amount of pricing they've taken over the past 3 years or so, over 30%, and with that much pushback from the consumer. So I'm really nervous around the second half in terms of some of these tough compares without carne asada. We'll see if Al Pastor is a lot more popular than carne asada. It can't just be as popular, right? It has to be even more popular to drive that incremental transaction. So if transaction growth slows, just given the comparison with carne asada and some of these price increases in California, I'm a little nervous that Chipotle's valuation may not necessarily hold up.
All right, well, Chipotle, at least for today, up just about 8%. Nick, real quick, before we let you go, if their valuation doesn't hold up, what does that downside then potentially look like?
As of right now, my price target is 2,400, and I have a neutral rating.
Changing that anytime soon?
I can't comment. I could get fined if I say anything.
All right, Nick Setyan, we're going to have you back. We appreciate you taking the time to join us here this morning. Nick Setyan, Wedbush of Wedbush Securities. Thanks, Nick.
Thanks for having me.